Welcome to Trading Tips for Indices YouTube channel. This video is about 5 solid trading types for day trading with examples. Now the agenda of this video is to give the introduction about these trading types and the end of the presentation goal, what you are going to learn by the end of this presentation and explanation with the examples. That means you are going to learn about 5 trading types with examples in this video. Then I would like to summarize this video. So the first thing I have to discuss here is the introduction, where in the introduction we have 5 solid types of trading strategies. One is trend following strategy, second is breakout strategy, third one is a swing trading strategy, and the fourth one is the scalping strategy, fundamental analysis strategy. Okay, let's get into the video. What is trend following strategy? First of all, I would like to tell you the definition here. This strategy involves identifying the direction of the market trend and then placing trades in the same direction. For example, if the trend is bullish, the trader will buy stocks or other assets that are expected to increase in value over time. So I would like to give examples for all these type of trading styles. So let's get into the video. After that, I would like to discuss what you are going to get by the end of this presentation. The goal is you are able to apply this in your trading, or you will get benefited with this style of trading, and you can choose your own type of trading with respect to your psychology. Now, trend following strategy. As I have already tell you the definition, I will be explaining this in my own words. The strategy involves identifying the direction of the market trend. For example, Nifty and Bank Nifty is moving in upward direction. You have to understand and identify the trend of the Nifty before it is making a big move. That is our motto in trend following strategies. After making moves, anybody could tell that Nifty is in uptrend or Bank Nifty is in uptrend, but the intelligence and the hard work lies at before predicting, before moving the indices or any stocks. You would like to identify those stocks that those are going to give profits to you, or it is in trending mode. So I will give you most examples for trend following strategies. My motto here is not just tell you what is the trend following strategy and its definition. My motto is to tell you where you can get all these things from. Okay, I hope you understand what my intention is. For example, I am using the CPR pivot points. I am a big fan of CPR pivot points. Even though I learned about some of other indicators, I don't very interested. I'm not interested in such indicators. I'm just involved in CPR pivot points. That's it. Maybe after 5-10 years also I'm going to trade with CPR pivot points, which is a leading indicator. That means this indicator is the price based indicators. Price action is supreme in stock market, day trading, or any investment. Price action, you have to consider the price action along with CPR pivot points. That would be a great advantage to you, trust me. And the another one is with moving averages also. You would like to know the trend following of the trend following of the index or the stock. Like that, you can use relative strength index to identify the trend, moving average convergence and divergence MACD to know the trend, and the average directional index also. These are some of the examples that I know to identify the trend of particular indices or stocks. Now let's get deep into this video. Now I would like to tell you what is the trend with the explanation of the trend with CPR pivot points. Okay, by definition, a trend is the general direction in which market values or the price of an asset move. Trends can be upwards, bullish, that means bullish, downwards, that is bearish, or sideways or consolidation phase, that is flat phase. Now, let's get into the charts and identify the trend with the CPR pivot points. For example, you are trading in Nifty and Bank Nifty and you don't know about the CPR pivot points. You have been using any other indicator to trade. Now, I'm here to discuss about the CPR pivot points trend analysis here, because if you don't know the trend, you may not get profits on by the end of the month. Okay, you should know the trend, because if the indices Nifty and Bank Nifty are moving upwards and you are applying downward, that means bearish strategies in your trading, how could you get the profits? No, you can't get the profits, because you have to be in sync with Nifty and Bank Nifty. Then only you can get money out of the market. Okay, now we are discussing about what is the trend with the help of the CPR. Listen this carefully. First of all, I would like to show you only the CPR pivot points here, because you need to know, before applying any strategies, you need to know complete information about if CPR pivot points. Then only I could explain you in a understandable way. Okay, see, this is the CPR. If the price stays above it, this acts as the support. If this price stays below it, this acts as the resistance. That means if the price come from somewhere here to till here or here, there is a greater chances to bounce the price like this. Okay, if the price is somewhere there and comes till here, there is a greater probability to bounce like this. This is the actual thing about the CPR. Now I'll discuss some more points here. You need to know about what is R1, R2, R3 and R4 here. Likewise S1, S2, S3 and S4. These are the supports and these are the resistances. I hope you know what is resistance. Resistance is nothing but when the price goes to that level, the price is likely to reject from that point. That is called resistance. Whenever the price comes to a location and the price gets support, it takes the support there, it stay there and bounces to another direction. This is called support. Okay, you have to know this. With this information, you can know the trend of the Nifty or Bank Nifty or any index by using the CPR pivot points. Now, what is trend analysis here? How you could know the trend of the market? For example, for 1 to 5 days, the price stays above the CPR. The price stays above the CPR and suddenly the price closes below S1. This is very crucial point. When the price closes below S1, in case of the index is in uptrend, then it is said that the index is moving its trend from uptrend to downtrend. If you don't understand this, please repeat this for 1 to 2 times. When the index is moving for upwards for 1, 2 or 3, 4, 5 days and suddenly one day it has closed, end of the day by 3:30 it has closed below the S1. Closed below the S1, then technically that index or the stock is showing that the uptrend has moved to the downtrend. I will show you the examples here. Okay, if you see here, you know this is the price. Okay, this is the price, and if you see here, the price has started here and then goes above the CPR and ended closed at this point of time. For 2 or 3 consecutive days, the price is moving upwards, this time also upwards and again upwards and again upwards. We are looking for closing below the S1. Okay, if the price closes below the S1, that is considered as the trend shift here. Now I will show you. Now currently the Nifty and Bank Nifty are in the uptrends. Now I will show you how this would be in the charts, because for about 15 to 20 days the Nifty and Bank Nifty are in uptrend. So see here, when the price opened at this point and it took the resistance at previous day high and it came till here and closes below the S1. So this is an indication that the trend of a Bank Nifty has changed from uptrend to downtrend. Okay, you have to analyze the trend like this, but I would like to tell you, not all the time this is right. So you have to be careful about the potential loss that you could occur whenever you enter the trade. For example, technically this is said to be the trend changing, that is uptrend to downtrend changing movement here, because it is closest below the S1. So I expect tomorrow onwards I am going to apply the downtrend or bearish strategies to the Bank Nifty, but suddenly it has opened with gap up and it's been trending all through the day. That means nothing is 100%, but you have to learn the system and apply the system. Then you are going to get a good edge in the market, because if you win 50% of the time also with 1:2 risk reward, you will be in profits. Now this is trend changing. Let's go to our presentation here. I hope you understand how to know the trend, whether it is uptrend or the downtrend or a consolidation phase. Actually, I didn't discuss about the consolidation. If I discussed all such things in this video, this would be a lengthy video. So I would like to shift it to the future videos. So I hope you understand how to know the trend with the CPR pivot points. If you don't understand this, please ask me in the comment section. I will clear your doubts. Now, once you understand the trend of the index or the stock, you have to apply the bullish strategies when it is in uptrend or the bearish strategies when it is in downtrend. Okay? Hope you understand this. Now, let's get into another style of trading strategy here, which is the breakout strategy. Breakout strategies are the most efficient strategies here, because once you enter the trade, you are going to get a good amount of money if the trade is successful. So here I am having the definition with 5 different styles of breakout strategies here. If I discuss all these breakout strategies in detail, it would be 24 hours. So I would like to discuss only one strategy for each style of trading. Okay, in this breakout strategy, I will discuss the momentum breakout strategy here. Don't get confused with all such names, etc., etc. Just understand what I would like to say. I would like to say there is a way to trade the market. When you do it by all yourself, what your mind says, what your heart says, you will not get money out of the market. Even though you have more or less you are in profits by the end of the month, everything will be taken out of the market. So out by the market. So I would like to tell you, just do your research. Even though you are watching the video, just do your research and understand and give time to which style suits you. Once you understand the risk appetite is good for your personality, just go through the strategy for 3 to 6 months. That is my sincere advice to the new traders. Now, the breakout strategy here. This strategy involves identifying key levels of support and resistance, and then placing trades when the asset breaks out of these levels. For example, If a stock has been trading within a range for some time and then breaks above resistance level, a trader may buy the stock in anticipation of further price increases. I know you are in a great confusion that what this definition is saying to me. So, I'm here to simplify the things for you. I'm taking you to the charts and explain my way of breakout strategy, because there are lakhs and lakhs of traders over there. Every trader has its unique style to get out of the money, to get out of the money from the market. Okay, this is my style of momentum breakout strategy. I'll give you the example here also. This involves buying or selling a security when it breaks through its high or low price range with high volume. The example for momentum breakout strategy in my view is red candle high breakout strategy. I know this is so confusing for you, but once I took you to the charts, it would be very easy to understand the breakout strategy, because no need to memorize or remember everything in this video. Just feel the markets, feel the thing what I'm telling you, what I am showing you. Now the example for red candle high breakout strategy, which is a momentum strategy here, I would like to take you to the back testing charts, my back testing charts. Okay, so this is the chart, because yeah. Now see here, red candle high breakout strategy is a momentum strategy. Once you are interested in breakout strategies, this is one of the good breakout strategies that appears in Bank Nifty and Nifty most of the time. Okay, see here, this is the red candle high. This is the red candle high and this is the red candle low. I will tell you what is the psychology behind this trade. Uh, think like this. So many traders are novice traders here, and once they saw that this is the big red candle, they thought like, novices thought like, this maybe this day could be a downtrend day, and I will enter when the price come till somewhere here or somewhere here or somewhere here. If they enter at any point in this candle, they have to put their stop loss above this candle, right? Wherever you enter, you have to put your stop loss above this candle. If you enter low, you have to put your stop loss below the candle. So this is the scientific thing you have to follow every single time you place a trade. So this is the red candle high breakout strategy. Whenever you see this sort of candle, just mark this high of the candle like this black candle. See here, when the price comes here, there is a rejection from this level, because all these traders who are entering here thinking that the market is in downtrend today, they won't let you to take their stop losses here, so they push the price downwards. But the momentum here, all the other traders, majority of the traders thinking that the bank nifty is going to have a blast today, as per their analysis, and they started to buy it here from here, because the 20 EMA is a powerful trend trading thing. So they trend trading indicator. So they pushing the price till here, because this is a breakout. When breakout occurs and all the stop losses, those who put their stop losses here triggers, then there is a big move happening here. That's why when you trade breakout strategies, the profitability is very high. When you compare with other strategies, the probably profit taking is very high, and but it take some time to get this sort of things, this sort of red candle high breakout strategies. But whenever it gives you a good amount of money. There are particular rules for every strategy. You have to learn those rules. So let's see another one also, which is the red candle high breakout strategy. On this chart, there may not be a considerable trend over there, considerable movement over there, over here. But when you enter here, put your stop loss below the breakout candle, you are getting at least 1 is to 2 risk reward here. Any trade that is giving 1 is to risk 2 risk reward is a good strategy. So I would like to tell that any strategy 1 is to 2 risk reward, by the end of the month you will be in profits. And now this is the another red candle breakout strategy. This is the breakout candle, and you enter once this candle closes above this line, putting your stop loss below this area, and you're getting 1 is to 2 risk reward for sure. Sometimes there is a big moves till here also, but we don't know in the live market where is the move ends. But I suggest you to take at least 1 is to 2 risk reward. Without 1 is to 2 risk reward, please don't get out of the market. 1 is to 2 above is very good, but below 1 is to 2 that is not a good system. Now let's get into the presentation here. I hope you understand what is breakout strategies here. There are different ways to take the breakouts, like a cup and handle pattern, something like that. There are hundreds and hundreds of strategies over there. But my way of doing momentum breakout strategy is using red candle high breakout strategy. Now, the third one is swing trading strategy here. Swing trading strategy. This strategy involves holding positions for a short to medium term period. Please ignore the sounds behind, because I'm doing this video at my house, which is very noisy. Please ignore this. If I consider all these things, I can't make the video in a regular basis. So please ignore the sounds and show some patience. So, swing trading strategy. This strategy involves holding positions for a short to medium term period. Okay, usually a few days to few weeks. The trader looks for price swings or fluctuations in the market and takes advantage of them. For example, a trader may buy a stock that has recently dropped in price and then sell it once it has rebounded. So again, I'm going to give an example for this. In these five things, I am giving you price action trading strategy here. The example here also, with the example, this swing strategy involves price action, and this involves analyzing the price movement of the security to identify patterns and make trading decisions based on those patterns. I would like to take you to this page to explain the price action trading strategy or the swing strategy here. One of the swing trading strategy for me is swing high and swing low. Whenever the price is reaching swing high and it is making a bearish candle over there, there is going to be a move from swing high to swing low in in general terms. But another way I am teaching you here. Just copy this. Let's go to the, because for swing trading you have to know this. So what the swing trading is nothing but you buy today, and you expect the stock or the index to move in upward direction or the downward direction according to your research, and you expect to have the profits in your direction. Now the swing trading involves something like this. Whenever, if you see here today, 4th May 2023, and Dabar Hero Motor Corp is showing their quarter 4 results. Okay, their profits, they have announced their profits today. HDFC also have announced their profits today. For example, if you are trading HDFC, Dabar, as you are trading in stocks, and if you apply your style of indicators, like my style is CPR pivot points. when I apply the CPR pivot points and you know that tomorrow is going to be a profits announcing for fourth quarter, and you know that the HDFC is posting a good amount of profit, net profit, or the profit after taxes will be very high. So you expect HDFC is going to be a good move in HDFC. So you go to HDFC page and do your pre-market analysis, and you are ready to take the trade, because this could impact the HDFC stock for 1 to 2 days, because it is showing a good amount of profits here. Who wants to enter the stocks? Who wants to take stocks from a company? If they are seeing the profits, they are prospering in their company. The company is prospering. You want to prosper with that company. So this is the thing here. When you see this sort of things and you know that this is going to happen in your direction, you will take the swing trading strategies. Okay, you enter with swing trading according to your system with the price action. Okay, now I ignore all these things because there is no time to discuss all these points. Number 4 is the scalping strategy. The most difficult thing in day trading is the scalping strategy, in my view, because you have to take your decisions in micro nanoseconds. Okay, if you are good at scalping, then you can be anything in your life. Okay, it involves lots of pressure in the markets. First difficult one is the scalping, next difficult one is the day trading, third one is the swing trading. These are so difficult to apply to the markets as per the general terms. Okay, what is scalping strategy? Now explaining this is a little bit clumsy to you, so I would like you to take you to the moving averages, scalping with the technical indicators. This is the number one thing. My technical indicator in case I scalp is the moving averages. Yes, I scalp with moving averages if at all I want to do it. Now I will show you how this works. Actually, I am not good at scalping. I didn't try the scalping because it involves lots of pressure, but I would like to tell you what is scalping today. Because if you understand what is scalping, there is a chance that you could use it for your future trades. No. Sorry, please wait for a second. Sorry, I missed that. Okay, I will tell you. I will tell you what is scalping here is. Okay, I missed that screenshot. Now let's go to the charts and explain what is scalping here for you. This video may be very lengthy but very informative. Please watch this video so that at any point of time you may feel like, aha, this is the thing I want. You may feel like that. Just the scalpers, most of the time the scalpers scalp on the 1 minute time frame. For example, you know about the CPR indicator, how to trade the CPR indicator, and if you see a bullish pin bar here, even though this is the red body, it is a bullish pin bar because this state indicates that there are lots of buyers present over here. So if you see here, after the close of this candle, you enter. Okay, you enter after the close of this candle. Oh, and put your stop loss below this candle, and you aim for 1:1 risk reward. Okay, at least 1:1 risk reward. You enter with big volume. Okay, you enter with very big volume, and with that volume you take your decisions according to the system, and you are aiming for 1:1 risk reward. Most of the time scalpers take 1:1 risk reward minimum, but it is very risky. Now you can also scalp with the 20 EMA. Yes, you can scalp with the 20 EMA with particular rules. I can't discuss everything here. You see here, this is the bullish pin bar here. Did you see this? This is the bullish pin bar and closes about 20 EMA. You put your stop loss below this. Just aim for 1:1 risk reward with high volume. Okay, this is like this. But we have to learn in detail about scalping. Then only we have to put that large amount of money in scalping. Now, the last one is fundamental analysis strategy. I have already discussed this. I will tell you what is it here. This strategy involves analyzing the financial and economic data of a company or asset to determine its intrinsic value. The trader then places trades based on the difference between the intrinsic value and the current market price. For example, if a company's financials indicate that its stock is undervalued, a trader may buy the stock in anticipation of it increasing in value over time. Yes, this is a big definition, but the metrics for fundamental analysis, how to do fundamental analysis, is earnings per share, price to earnings ratio, price to book ratio, return on equity, and debt to equity ratio. These are a different strategy, different side of the stock market, where you are having investment mindset and you don't tumble when prices moving zigzag way. When you are fundamental analysis strategist, you don't panic about the fall or the up move or the consolidation. You are taking the decisions with these metrics. As I was not into the investments or the fundamental analysis, these are the metrics, but I can't explain in detail about this. And one thing I want to tell you, if you are a fundamental analysis strategist and you know all these metrics, and you know that Titan Q4 results on 4th May 2023, you are doing seeing all these metrics and applying the strategy, appropriate strategy to take the profits. That is the thing you have to do, because you need to equip yourself with the information present over the world about the markets. That is very essentially in my view. Now this is the last strategy. I have discussed this and the summary. Like life, stock market has many perceptions. What you focus on is matters to get success. Learn, practice and repeat. This is the golden advice that is giving to you, because you have to learn a system, practice the system and repeat the process. Then one day you will be amazed with the results. Trust me, you will be amazed with the results. Thank you for patiently watching this presentation. I hope you have some value out of this presentation. If you have any doubts, I'm here to answer you 24/7. Please comment the doubt in the comment box so that I will give you the answer, just a answer or a video about it. Thank you so much for giving your valuable time to me, and I am very grateful to tell you, to teach you the knowledge I am having. Thank you so much for watching my videos.